with the show. And like I said, I'm going to take a look at Bitcoin, our friend, the pal, the fantastic Bitcoin, the one that Elon Musk loves so very much. And what we can see here is, of course, that the price action really battered right through that level that we were looking at. That, of course, was our previous all-time high. And this is probably going to have a degree of confluence when we look towards lining up with our Fibonacci retracement here. So what we're going to do is take it from the most significant previous low. This is from the wick over here, which isn't actually the lowest, the lowest body closure, but I'm going wick to wick on this one, lining up here and saying, oh look, okay, so fair enough in terms of what we just spoke about with regarding simple market structure. What you have here is the 236 point lining up with, of course, our previous high on the go over there. Do you want to see what that looks like on the most obvious of little additional indicators? Well, you can over here, if I just draw on, like for instance, the Donchian channels, and you can see here it lining up perfectly, of course, as you would expect, because that's precisely how that works. And this is giving you a number of reasons to be aware of that area. Of course, what you're really looking for is for the continuation of the overall trend, which is identified by looking at these areas so far. 1, 2, 3 of them, 1 and 2 of those at the minute. Those are, of course, higher highs and higher lows, and we're seeing that, of course, between these two highs at the minute there is bearish divergence on the 4-hour time frame. If we were to get a local low, so movements down past our previous structural high, it would be absolutely reasonable then to look towards further continuation down towards 38,000 thereafter. If we actually wanted to, we could even wick down as low as 37,000 before coming back up the way without actually dramatically changing things overall. But I'd probably be saying that targets currently, just based off of what we're looking at right now, of 41,200 or so, 41,300 probably. Let's just call it 41,500, just so that we can not argue about things. And then down towards 39,000. Let's call it 39,000 as a target thereafter, 38,800, and then thereafter down towards the 37,000. And these are big numbers, etc. From the high, that is of course a 8%-ish move to get down towards that first target, a 15% move towards that second one, and an 18% move towards that third one. So what we're seeing there is, of course, less movement in lots of instances than what we're seeing with altcoins. So if you're looking to hodl something currently because of the overall market trend, Bitcoin is calling out to you. If you're looking to trade something currently, then altcoins are calling out to you. If you're looking to expose yourself to huge risk and potentially then therefore huge upside potential, you've got the bigger movements happening over there in altcoins. But when we jump over towards a little, just to reconcile everything that I've just been saying there by taking a look at the Bitcoin dominance chart, you can see that we have actually just turned things around ever so slightly for us. If we want to identify how that's happened, bear in mind that I'm looking up here at the 4-hour time frame. That's actually the zoom level's wrong on that. So in terms of on your Streamlab, on your screen at home, I'm looking, bearing in mind I'm looking up towards the 4-hour time frame. That was a little bit more complicated than I wanted it to be. I'm looking at the 4-hour time frame here, and I'm looking at these previous lows. Of course, when we crushed the 618 and then came down and found support at the 786, and we can see that, of course, as well, we had that bullish divergence there on the charts at the time. Now, what we're having here between these two highs at this point and this point here is bearish divergence. That bearish divergence just so happens to be between the area of the sort of the front door and the back door of the golden pocket. That's those two white lines on this one. So we're getting a degree of that. Could we see altcoins then carry on afterwards with a little bit of a tapering off of the of this here, well, of the dominance? Yes, we could. But overall, of course, this is the early stages of a recovery and an upward trend on this one. Something to be aware of course, if you're looking at this chart to put the context of all of your other trading, to put all of your other trading into context. Now, slightly sort of broadening aspect to that there on that, laid out just like that, maybe worth mentioning as well, giving you the potential for any movements up towards the top end. Just to come back towards your starting points as well. So we'd have to look out for that. That would maybe be the trigger for alt season if we did see a capitulation of that event. But that's not happening right now, and instead what you're really looking to try and do is anticipate whether or not we're going to come in for higher lows overall. I'll leave this on here for just now so we can come back and revisit in the future. But this is the situation. That's just a wick there though at the top. So really, actually, it's more like a channel than it's broadening. I was maybe a little bit sort of premature to say that. Yeah, it's not really currently because of that structure. Yeah, it's perfect actually. That's great. That's great. That's what we're looking at currently with regards to this one. So can we see this pull back the way and then continue up the way? Yes, we can. Nice oscillations to be happening with regards to the movements in the market. Now, what could happen is, of course, multiple percentage point moves for altcoins, followed by multiple percentage points moves for bitcoins, but then, of course, just slightly less of them, creating a degree of attrition across the market. If that's the case, just look out for it yourself. You'll be aware of it at the time if that's the case. By the way, thanks to everybody who is in the chat and is part of the experience that we're doing right here with, of course, the Rocky Outcrop show. If you like this show and you're enjoying what you're seeing here, then of course there are various ways of supporting the channel, but one of the best ways of doing that is by introducing one of your friends to it. Remember, something that I always say, a friend of yours is a friend of all of ours, not just mine, all of ours. We have probably the friendliest community, at least I want to say that we have the friendliest community in the whole entire YouTube space. Yes, I know, big words. We are in crypto land, but nevertheless, we're absolutely amazing. Now, okay, then maybe not the entire crypto space. Maybe there's some sort of puppy rescuing society out there where everybody just seems like so delightfully friendly all the time. But in terms of, like, you know, your vast majority of things, we're definitely doing some home runs in here. And I'm really pleased to see the chat ticking away nicely as you all chat away to each other in there as well. And you know, you get the likes of I'm trying really hard not to sell crypto. I even sold Cineworld shares today just to get myself some cash from KDoc. Interesting stuff there. Cineworld, if you're interested, is maybe perhaps the UK equivalent of the type of thing that you have with AMC in America. It's a cinema company, obviously very, very easily identified by that name. I'm really disliking the MACD. If anybody wants to go ahead and put in a complaint with TradingView about it, feedback in terms of their zoom levels for me, I'll not say no. Then anyway, so what are we seeing with regard to, well, I didn't really do the TA, or did I do the TA? It's hard to remember at this stage. I'll just have to do some more of it. What are we seeing here on the Bitcoin charts? Well, if we do move below, I did the TA already. Who am I kidding? I did the TA. We're looking to see if, in terms of the broader term structure, you know, we want to be supported by the 50 simple period moving average. Currently, that's coming in here at about 34. So, you know, quite a ways to go. If you're looking to trade between these areas, then easy enough to do so because of the vast amount of forgiveness that you'll be given with regards to looking at the key areas on the 618 Fibonacci coming in there at that 50%, that 50 simple period moving average here on the daily time frame. They're coming in for a higher low overall. If we don't just simply super extend the price action towards the top side, is there a likelihood that we would do that? Well, there absolutely is. And one of the ways that we can see this as having been the case was with bearing in mind this really big hidden bullish divergence that I pointed out numerous times in the past. I even have it written up here on this particular chart. It's not on a note on this particular chart, but I'm sure it'll be on one of them. Where is it? Oh, there we go. So, you know, could we have, so we're anticipating this one for quite a while already, could we see hidden bullish divergence on the MACD and the daily and the histogram? And well, yes, we did. And could we see us having been finding support and resistance in amongst the key areas that we already pointed out in the past? Why, yes, we could. And the yellow line here, which is obviously so crucial, finding it being an inflection point that ultimately became the resistance flip support. Is it surprised to see that as being the launch pad for, of course, the SpaceX mission up to these 44,000 price points? Well, that's of course absolutely no surprise to me. It would be of no surprise to you if you'd ever hit that subscribe button and that bell. And that's the last time I'll be telling people to subscribe in this episode. And I'm moving on from doing the TA at the moment. You can only spoon feed people quite so much. Moving on to Ethereum then, and what we see is that Ethereum has just been bounding around in this area, and then oopsie, whoa, it's like Snake, that game on the old Nokias. There we go, made it. And coming to the 236 Fibonacci retracement point, where it's actually found body closure support here on the 24-hour time frame, with one movement down yesterday, taking us down as far as $1,500, where we actually came down to the 382, giving us that easy trading scenario at the Fibonacci's so very often do when you're in slightly kind of manipulated, painted on markets like we have in crypto. Clap, clap, clap. Well done, robots. Thank you so much for keeping us in the money-making game. So people get whipped out in this action. Obviously, we came in for highs. It was very exciting for everybody talking about the highs. And then, of course, we came in back down the way. Then we came in for highs again, actually putting another all-time high today with high prices of 1775. And then, of course, you know, we've come back down to where we have, you know, previously been at the $1,700 level. Is this a bad thing? Not at all. Could we be going up the way? Absolutely. This Fibonacci, of course, remains invalid as yet, as it stands, and we're getting a bit of that old we're getting a bit of the old inflection consolidation here. It's consolidation. What do I call it? Of course, consolidation at resistance, and that is, of course, consolidation at resistance at the all-time high. I mean, you don't get much more of a perfect place to really take a moment out to think about things before you crack on up than these sorts of areas. What do we have with regards to this price movement here as well? You know, you're looking at highs up there and then lows down here that get lower, so it's broadening out. You also have various other ideas. A bit of a failed diamond. You know, if we'd had this or a broken diamond, if we'd had this high push up a little bit higher, then perhaps we could have talked about that. It's really not quite. It's not a very good one. Maybe if we'd had this high, if this high pushes up a bit higher and then comes back down and forms a higher low overall here, putting in you know, a higher low here at the 236 point yet again, not cracking down below it on the 4 hour, then maybe you can start to look towards diamonds. What's the point in any of them? Well, broadening structure things would take you back towards your starting point here. That's not fantastic. You know, we're not really getting a lot of insights from that, but the diamond type structure over here would give you the ability to treat this like a flagpole of sorts and take a measured move off the back of it, like you could do here. It's no surprises for getting the downward side measured move, of course, that's obvious, but the upward side measured move would take you up towards 2,200, and 2,200 is indeed one of those upper side targets that we have had in mind for quite some time already. Looking back the way towards when we first came in for highs, you know, up here when we first came up towards the 13,500 area, having pushed all the way up and looking towards the extensions beyond, you know, we already took out the 1634 area, but the next one in there at 1900 is no big surprise that of course is the next target should we push on up the way from where we are now. About 1900, the next one then of course comes in at 2200. This is all based on the proviso of, first off, staying above the 236 over here and our fake out territory coming all the way down as far as the 382. Anything in between is simply going to be considered to be a challenge of the 50 simple moving average here on the 4 hour time frame. On the 24 hour time frame, looking at the oscillators down below, obviously we've got that stanking, disgusting, obvious bearish divergence here at this top end on all of the oscillators, and in fact I think that even includes the DMI here. Indeed it absolutely does, but we're positioned fairly well. What we need to see is this, of course, continue up the way. We need to see the DM negative, take out the 30 and continue to trend up the way, unless we want to see that come back to bite us. There is obviously as well another thing very much worthwhile pointing out here for us on this chart, and that is the consolidatory nature of the RSI. That gives you that tightening spring aspect of things, and perhaps, you know, whoops, if I could bring this up, perhaps we're going to be able to look towards things like a bullish an oversold cross on the stochastics. Now, what is an oversold cross on the stochastics? You've got one line of stochastics pointing down the way, then you've got the other line kind of going like this, and whoa, we've crossed over, and then this is happening, and you can see they've got events where this happens in the past on the old stochastics. It's just one of these reasons why, of course, the old calling this zone over bot is bullshit. by the way. So, you know, of course, like I've said 1,000 different times on the channel, whenever you see something like that happen, because as we've seen, it just simply leads to more of the upside. We are, of course, in a strongly trending market, and until such times as something gives out, then we know that it is, of course, business as usual. Faffing around with the charts there slightly, as I tried to point out that really, if you are looking at this area as being the danger zone, the real capitulation zone starts to come in at our previous highs. The 50% Fibonacci retracement point, talking $1,400, and the parabolics are lining up with us perfectly to say there's probably not much point until the dust settles in holding on to longs beyond that zone. Of course, you know, you'd be looking at other areas like the 618 to come in there, but if you're if you're in a profit making position and you were simply following along, and I'm not a financial advisor, none of this is financial advice, and you're following along with the trend, then you'd be looking towards the parabolic SAR over here to give you that nice and easy risk management zone. Is a highly effective treatment. I was going to say there, it's a highly effective treatment. Indeed, it is, of course, the liposuction of TA. If you want to talk about it in that sort of a way, it's a handy enough thing to do. You can do it too in the freedom of your own home. From this point here is easy as well to answer when people say, is it too late to buy? Well, in a sense, you know, because I did say earlier on, the whole it's never too late to buy. If you're looking at this thing, then the buying point on this one was, of course, back over here when the prices were $900. That's where they were. We wanted them to go back down there again in terms of giving us up an opportunity to buy again. But we're talking about this in terms of hopefully, you know, it would only be a wick, because if we get a body closure, then it would be going to $700. That same situation remains the case, and if we did see a capitulation event happening, we've got three main targets in here: $900, $700 and something dollars, $650 or whatever coming down the way if you were to actually capitulate in this market at any given time. But we're quite a ways away from doing anything like that, are we not? As I say, 1900, 2200 are the upper side targets if we see a resolution of this thing positively. The pattern, bit bollocks, but you know, there we have it. Then looking on